Range bound, that's how trade has been so far today. In fact, those jagged edges don't mean a whole lot if you were to bring up the Nifty intraday graph, because it's been a very narrow band from the high to the low of the day, settling around the 24,770 thereabout print, 24,800 on the futures. And it's largely an Escorts which is down today, Oro which is down, Titagar is seeing some profit taking, Shree Cement, Bosch, these are names which are languishing, but a lot of earnings reaction. Look at LIC, a dead of a stock, and it moves up 7.5% after its numbers. CDSL, which is higher by 4%, and IGL, IDEA, BHEL. You can't really drop any trend when it comes to both the laggards as well as the winners today. But yeah, suffice to say, thanks to the movement in an IDEA, you've got telecom as a sector which has been gaining today. Other than that, it's pretty lukewarm all through. An Indusand Bank is down 2% today when you talk about the Nifty movers. Nestle, Tata Consumer, Ultratech Cement, ONGC, M&M, ITC, etc. These, of course, are your laggards in trade. Important to take cognizance of what's really happening with the global markets as well, because it's a very, very flat start for Europe as well. Absolutely flat, in fact, as we speak right now. And that was pretty much the case even with Asia. They closed in absolutely flat with just a marginal negative bias for markets like Hong Kong, which was down about 0.5%. Rest of them were absolutely flat in trade. So quiet consolidation. But let me welcome on board our experts and figure out what is it that they're making of the market mood. Kunal is here in the studios with us. Kunal, what's the pause waiting or awaiting after this?
It's rare to see a pause, I think, because it's the expiry week, tomorrow being the expiry day for the index, and that too after a fabulous last two series. Because in the last two series, we've scaled up some 3,000 points on the Nifty from 22,000 marks up 22,000 levels, where the move started off in the first week of April towards a point where so far we are almost at the 25,000 mark, 24,800 thereabouts for the indices. It's been a phenomenal last 2 months. So it's a bit rare to see the index into such a kind of a tight range. But generally, I think we've seen, and looking at the last two expiries specifically, that the real move for the index starts off when you see when a fresh expiry hits the indices. So maybe a couple of days of more consolidation. 24,550 still remains to be a strong support, and I think any move towards 24,550 mark for the index of the very short term, I think should be taken as a good buying opportunity for short term traders.
All right, so that's the day coming in on the index front, but definitely in some of the newsmakers, it's one of those result candidates, that is Granules India, that is in focus in trade right now, though there has been a bit of a margin decline on a YOY basis, but the management is highlighting the fact that they are transitioning into the high margin products, so that should bode well for the margin in the times ahead. Other than that, it's HDFC Life as well, because just yesterday, if you remember, there was an upgrade coming in from CLSA, where they not just upgraded the rating but have also raised the target price as well, and today we are seeing the move up, almost a 2% jump coming in on HDFC Life, one of the top gainers in the Nifty 50, and along with that LIC, of course, within the insurance pack, is doing very well. Other than that, Indusand Bank, that stock is taking it on the chin, almost a 2% lower for this particular counter, and Bajaj Auto just ahead of the numbers, that stock is down too, though this time around the expectation is of 20.2% margin coming in. That will be absolutely flat growth on a YOY and sequential basis, but definitely management commentary on the demand is something that we will be watching. But Kunal, specifically on the insurance pack, give us your sense that which is the stock maybe that is standing out for you, and will you still be a buyer in HDFC Life?
Yeah, in fact, we were discussing HDFC Life.
I think that this was one of your chartbuster ideas.
Exactly,
today.
and in fact, in a couple of weeks back, also had highlighted HDFC Life because it's coming out to be one of the strongest name on the relative strength basis. So, the best way to try and map up stocks within sectors to try and analyze that which sectors are the ones which are leaders or at least emerging out to be fresh candidates of a fresh breakouts. I think HDFC Life managed to stand up quite well as compared to many of the other peers. And then when we try and compare this with the likes of SBI Life, say ICICI Pru, etc., the stock price performance for HDFC Life has been a lot more consistent. Most of the other stocks in the insurance pack have been literally all over the place. You've seen these stocks moving up in an erratic move on the upside, and then suddenly you see these sharp phases of price correction into these stocks. So that generally keeps the short-term traders a lot more unsettled. But HDFC Life has been a different stock altogether. The stock has been a lot more consistent. You've seen good volumes in the last 2-3 months, and now the stock perched at a fresh high 780 plus levels. I believe that the longer term prospects now starts to look extremely attractive. So it's not just a breakout of sorts for HDFC Life, which is very interesting, but I think it's the leadership quality which is coming back into the insurance pack that makes the trade a lot more attractive.
Oh, yeah, and the star performer today's got to be LIC after its numbers. A stellar performance there with record policies sold. Siddhartha Mohanty, the chairperson at LIC, spoke with us exclusively, and here's an excerpt of that conversation.
The non-par share has shown 50% growth, more than 50%. Yes, and from 18 to 27%. In coming days, my sense is in the current year, we are expecting some further growth in non-par share to AP. Further growth will be there. It will go beyond 30% also. That is our expectation. Any objective will be to demonstrate further growth in VNB margin, but it will be very difficult to give any specific number or a specific year. But current year, definitely our objective will be at least 2-3% plus over whatever we have done in the current last year that we are expecting. That work is going on, and very soon I think that will be finalized. Within 2 to 3 months time, our board will take a call. How much stake will buy, which company will buy, what should be the valuation, all those things finalization will be done within 2 to 3 months by the board. Dive project last 1.5 year, 2 year we are working on that, and now almost finalized. All milestones will be achieved. I think Q2 onwards milestones will be achieved.
Okay, that's that on LIC, seeing quite a bit of bump up of 7.25%. It's made it back to that 930 odd levels. But Kunal, when do you see a meaningful move? Do you think this kind of a move in LIC is sustainable?
So difficult to say that, Aisha, because of course on the back of results there's been a a strong exuberance of sorts for LIC, but in the historical charts there's hardly been a point where the stock has managed to live up to this kind of a gap up move. Immediately, generally post that, we see the stock going into a phase of a price correction or a consolidation. So we need to see whether over the next 1 week, in what context, in what state the stock gets into a phase of a consolidation, with the volumes dip down, the prices come back into say a mean reversion phase, whether the gap which has been created today for the stock price for LIC, whether that gap gets filled or not. So I think a lot of imponderables for LIC. I would probably be on the sidelines as of now. Maybe closer to 900 mark, depending on the state of how the stock converts back into a mean reversion phase, is where I would probably go for a buy on the stock.
All right, that's the day coming in on LIC, but a lot of these other counters, especially within the PSU pack, they are having a good day. BEL, of course, is one of the top gainers in the Nifty 50. Other than that, I was just looking at BHEL. That stock too is up around 2.5%, and today OMCs are also having a good day indeed. But Kunal, specifically on BHEL, how do you see this stock on the charts right now? Because I do know that you track the stock very closely.
Yeah, I do track the stock closely. In fact, on the longer term charts, the stock has come back after almost 3 quarters of a major price correction. And I think, if I'm not wrong, from 350 levels thereabout, which was the high mid 2024 for BHEL, the stock had come back to 186, 87 approximately as a low. Now the stock is on a path of recovery. It's managed to surpass the third immediate price corrective quarter for itself, and it's managed to break past about the 200 DMA. These are very strong breakout signals for stock prices when it tries to reverse a 3-quarter price correction, a break past above volumes as well as 200 DMAs, and that generally indicates that we are looking at a resetting of the entire cycle of uptrend for many of the PSU stocks, including BHEL. So extremely bullish on the pack on the stock at current levels, and my expectation is that over the next 2 or 3 quarters we should be looking at 350 plus as a potential target for BHEL.
Okay, that's that on the BHEL charts. Extremely bullish in terms of the build-up that the stock is seeing right now. But ITC, that's been the newsmaker. About 2.6% of equity has changed hands in 6 blocks that happen in ITC. And British American Tobacco, or BAT, is set to be the seller, which has been paring its stake in the company over the past few years. Snehi is here with more details on this deal.
Well, yes, so let's talk about ITC, a stock in focus and taking a little bit of a hit in today's trade. Now we have the updated details on ITC's block deal, and we understand that BAT, which is British American Tobacco, has completed block trade of ITC shares. 2.7% equity shares have changed hands, and 332 million shares have changed hands in 8 block deals is what we understand. From agencies, we understand that BAT has given a statement saying the net proceeds from this block deal amount to 121 billion rupees, which translated to rupee crores is 12,100 crore rupees. And BAT has also said that the net proceeds will be used to extend share buyback by 200 million pounds. Remember, they're doing a share buyback program in the UK. Now, when it comes to their history of stake in ITC, BAT held 25.43% stake in ITC valued at 1.4 lakh rupees, 4 lakh crore rupees before today's block deal. Now, after this block deal, we're assuming that BAT now holds roughly 22.7% stake in ITC and continues to still be its largest shareholder. And remember, last block deal, BAT had sold 3.5% stake in ITC on 13th March of 2024 for 17,491 crore rupees. Now, the question naturally that will rise in the mind of investors is what happens to BAT stakes in ITC Hotels. Remember that ITC Hotels has demerged from ITC last quarter, and BAT is all set to divest his $623 million worth of shares. That translates to 5,404 crore rupee worth of shares stake in ITC Hotels by 2026. This is something they had said when ITC Hotels was demerged, and BAT, remember, currently holds 15.3% stake in ITC Hotels. So that's BAT's plan going ahead in ITC Hotels. We can expect a stake sale over there as well by 2026. This is what the company had said during the demerger.
All right, thank you so much, Snehi, for getting us all those details. So it's not just about ITC where BAT has gone ahead and sold his stake rather, but also ITC Hotel is something that they will be looking out for. They have already made their plans very clear, and by 2026 we can see that happening as well. But other than that, in some of the other news makers, all eyes will be on Bajaj Auto as well, because tomorrow we are expecting the numbers, and this time when we see the overall volume, though on a YOY basis that has seen a marginal jump of 3%, but sequentially it was the export that did very well, because on a YOY basis the exports sales saw a jump of 19% versus a decline of 7% in their domestic sales. Other than that, in terms of the numbers, the key to watch out will be the margin figure. 20.2% is our expectation, given the fact that there has been a 3% jump in their average selling price on a quarter-on-quarter basis. The currency movement was actually favorable, but the product mix as well is something that will impact the margin figure of the company. So 20.2% is the margin expected. Other than that, a 4% jump on the EBITDA is also what we are expecting. But apart from the numbers, all eyes indeed will be on the management commentary, what they have to say on the demand outlook, on the domestic as well as export front. How are they seeing the KTM revival? That is something that we will be watching out for. But with this, viewers, it's now time to slip into a very short break. Don't go anywhere. We'll be right back with more on the other side with our whole host of experts.
After closing trades right here in ET Now, let me welcome on board Nitin Bhasin as well from Ambit to talk about what his take on the market is. Nitin, hi, good to have you today on ET Now. What is it that you're making of the market? Well, there are a lot of positives when it comes to, domestic earnings season, early onset of monsoon, the fact that we've overtaken Japan as the fourth biggest economy, the RBI dividend, and I can go on with that list. But then again, there is that looming overhang of what happens after this 90-day cool-off period when it comes to tariffs.
Good afternoon. Thanks a lot for this opportunity today. Yes, traveling across the world and, meeting some global think tank people, you come back to India where markets are hitting back to 25,000. Clearly good days over here. I think the earnings, what keeps me excited about the markets is earnings estimate, earnings for the quarter, earnings season gone by. I think where the bank's earnings sort of disappointed. I think largely apart from banks, most of the earnings, or we've seen more surprises than negative surprises. So clearly that shows you, there is an optimism from the earnings. The only thing is, does it lead to FY26 earnings estimates for the whole market move up? Remember, last time when I was speaking to a few investors, we highlighted that for the whole year as such, the earnings growth would be closer to about 10 to 11%. So I think that's the only thing, whether this quarter earnings growth surprises leads to the next year. The second good thing perhaps happening in India is the FI flows, and what you can see is large amount of sell downs by many key important and good quality companies, getting lapped up by the markets, which shows you that there is enough capacity or appetite in the world to buy into good quality Indian companies, whether it's a Bharti or whether it is a company like an ITC right now. There's enough capacity that shows, the appetite for the Indian stocks, I would say. So those are the things. And yes, RBI dividend clearly gives you a lot of fiscal room to the government in the year to come.
Right, okay. Just stay with us, Nitin. Lots more to talk about with you. We're going to try and fix that audio line with you in just a bit. But of course, LIC can't take your eyes off from that. The numbers are largely above estimates. They're going to be focusing on the AP growth and persistency. That's what the management has indicated. Or for that matter, Hindustan Copper. What a blowout set of numbers that's been. The EBITDA has jumped up 17%. Revenue has risen 29%. And that's, of course, auguring well for the sentiment on the stock. Or for that matter, smaller ones like a MedPlus, margins at 9%, EBITDA up 28 or 29% actually on a year-on-year basis. And then EID Parry as well, wherein the numbers have been quite strong. All these stocks are holding out very well. But then all eyes are going to be on Tata Sons, which is going to be holding its first quarterly board meet to discuss the performance of the group companies, the requirement to list as per RBI norms, and lot many other concerns. Anurag Joshi, my colleague, is here to tell us what we can expect from this very important queue.
Tata Sons, the holding company of the Tata Group, is convened its quarterly board meeting on Thursday. Now, the board meeting of Tata Sons will review the holding company's financial performance and also take stock and review the performance of all the companies in the Tata Group, and notably some of the companies which the parent wants to improve their performance. One of the key things that is likely to come up in the board meeting is the listing plan of Tata Capital, and also the negotiations about seeking a waiver for Tata Sons from doing an IPO. Now, Tata Capital has recently pre-filed confidentially its draft red herring prospectus with SEBI and stock exchanges for an IPO, and it is progressing on that plan. But for Tata Sons, the holding company, they had earlier sought a waiver from listing their shares, but that last year that was declined by the Reserve Bank of India. So that is a matter that is likely to come up for discussion. Notably, also the board meeting will discuss the performance of some of the units which like Tata Teleservices and its AGR dues, and also Tata Digital, which the parent wants to pull up its performance, especially some of the platforms like Big Basket, which it wants to catch up with the other peers. Tata Sons had reported a profit after tax of 34,654 crore rupees in FY24, and just last year, Ratan, after the passing away of the patriarch Ratan Tata, Noel Tata, who's the Tata Trust chairman, Tata Trust owns 66% stake, so he had assumed the position as a director on the board of Tata Sons.
All right, thank you so much, Anurag, for getting us all those details. So all eyes on that. But other than that, in the last 10 minutes or so, it's a bit of a per curve that we are seeing on Nifty Bank as well, almost 100 points of gain on that particular index. But for this, let's also welcome on board Shrikant Chauhan, who is the Senior VP of Technical Research at Kotak Securities. Hi Shrikant, good to be speaking with you. Firstly, help us with your take on the markets and any sector that is standing out for you in today's trading session. All right, Shrikant, I guess you have to unmute yourself. Shrikant, I guess you have to unmute yourself and please go on then.
Okay.
Okay, I guess there's a bit of a audio issue. We'll try to fix that up. But yes, indeed, it's the telecoms that are doing very well. Couple of these Adani counters are holding up well in trade today. And CDSL, this counter is definitely one of those strong movers. And Kunal, if I say the 1 month chart of CDSL, though it has been a volatile ride for this counter, but look at the move, more than 1500 is where the stock is at. Where do you see the stock headed from here on as well?
Yeah, it's been an attractive last 2-3 months for CDSL. This month specifically, the stock has done reasonably well, moving up from 1200 thereabouts towards now 1520, 1500 plus mark. So it's been a last 300 point move, a very strong up move for CDSL. The average volumes have moved up higher. I was actually looking at the RSI on the daily charts for CDSL, and that's almost like a 6 month high or a 6 month high for the stock price, trading now at almost 70-72 on the RSI for CDSL. So that's another indicator that the stock is, or the momentum for the stock is here to last as well as sustain. Looks attractive when we look at this as a setup, because prior to this in 2024 the stock was almost at 2000 plus levels. So after a 40% correction, the stock is into a recovery path, and with strength in indicators, we are looking at a potential up move further to sustain for CDSL.
Okay, that's some of the high flyers like a CDSL, which are looking extremely smart in trade. But I think we're connected back with Nitin. Nitin, help us understand how you've analyzed earnings so far. What have been the biggest hits and misses?
Sounds like you're feeling a strong connection with someone and you're hoping to
I think the way I look at it is that
and often
banks is one sector where we find that the disappointments in the banking sector. We were expecting that the bank sector would be actually leading, but however, even if you were to do IIB, which is IndusInd Bank, banks have sort of been lackluster. Most of the other sectors, perhaps some of the names, like as you mentioned a while back, Adani stocks, because of one-off or Bharti, some of the names have really held up really well in terms of earnings. So for us, it was more of positive surprises, and within the Nifty or the large caps, it was the banks which perhaps had a more lackluster numbers. So given that next year we have more rate cuts, our team believes closer to about 50 bips rate cut. Does it mean that the bank's earnings pressure are more next year, which are supposed to contribute to about anything between 40 to 45% of the earnings growth next year? So banks is something we got a little bit negatively surprised.
Banks is something that you like. Hi Nitin, good afternoon. This is Shrishti also joining in. But if I take a look at the whole lot of financials, it's NBFCs, and rather some of the smaller NBFCs have been doing well in the quarter gone by. And in the next couple of quarters, some experts do believe that the stress around that MFI book should subside in the next couple of quarters and should bottom out as well. What's your take on the NBFC basket, and anything in particular that you are looking at within this space?
Sure. Our view also has been that some good quality NBFCs, especially in the microfinance space, where the stress was and the stock price reaction was very high in December quarter. Perhaps in a quarter or so, as the things normalize, one should be looking at good quality companies. We cover companies such as Five Star Finance. We've highlighted that there could be a long pain, but such good quality companies one should be actually looking at. But at the same point in time, we recently upgraded companies such as Canada Finance, Canada Housing. So some of the NBFCs look good to us, good quality ones. But at the same point in time, one has to be also patient, because the credit stress will not go away very fast. But the cost of funding is definitely becoming better for NBFCs. So they should be looked at in the quarter or two by the investors if they are looking at reasonable valuations for good quality companies.
All right, Nitin, with this, we let you go on that. Thank you so much for taking the time out and speaking with us this afternoon. All right, back to the markets then. It's been quite a trading day for the benchmark indices. Nifty 50 still holding on to that 24,770 odd mark. But Shrikant, believe that you are back with us. So help us understand which are the sectors that you are looking at in today's trading session. Any sector that is standing out for you?
Yeah, I think see, specifically if we go through with sector specific activity, then today we are seeing some buying interest in PSU Bank. In fact, since last 3 days, if we see the activity, then PSU banks are doing much better than the other indices or other sectors. Also, if we consider real estate, then there also we are seeing some renewed buying interest because most of these stocks have again started moving up, and commodities. Today we saw some profit booking in commodities, but broadly I'm of the view that these are the three sectors where we need to focus, and there only we can see some more trend in the market.
Okay, we've got a big macro queue as well awaiting us. You've got the IIP numbers which are due post-market hours. So let me take it across to Varun and understand what our poll is penciling in.
Well, we are expecting a softer IIP data for the month of April. The street estimates is 1.02%. Now, this is because of broad-based slowdown in the economic activity. If you look at the core sector growth, which actually contributes to around 40% of the overall IIP numbers, that has increased only 0.5% in the month of April. And the slowdown was actually led by petroleum refinery output, which declined around 4.5% on a YOY basis. The electricity production was also it also showed a growth of only 1%. That was a muted growth. The steel production was up only 3% on a YOY basis versus compared to 9.3% in the month of March. The cement production slowed in the month of April. It was only the coal production which showed a good growth of around 3.5% on a YOY basis in the month of April. If we look, the overall consumer IIP, that is expected to slip in negative zone in the month of April, and this is basically because the rural demand that has weakened further. This is something that some of the reports highlight. The capital goods IIP growth that is expected to have improved in the month of April as compared to previous month. If you look at the high frequency indicators, they showed a mixed trend in the month of April. So if you look at the IIP numbers for the month of April, we are expecting 1.02%, and that is a little bit slow. And if you look at the basic number, that the core growth numbers that have come earlier, they actually indicate a slowness, economic slowdown in the month of April. So keep an eye on this.
We are expecting that the capital goods sector should continue to, or the investment cycle should weaken from here to an extent, and that should reflect in the data overall. So I think next 3 to 4 months are likely to be further softness before we can see some stability in economic data.
All right, so all eyes on the IIP data this time around. But other than that, back to the markets. It's ITC which is still holding on to almost a 3% cut there. But select auto counters are also under pressure today after a decent run-up in the past 2 weeks. We were just discussing about Bajaj Auto as well. On the back of the earnings, this counter will be in focus. Margins are the key to watch out for. But Kunal, help us with your take on Bajaj Auto. How do you see the chart shaping up for this counter?
Yeah, I think Bajaj Auto at current levels of 8,800 thereabouts, I think looks attractive as a continuation trade, because the stock in the last 1 month has done quite well, because from 7,500 levels there was a point where the stock was almost 20% or 17-18% lower than its 200 moving average. So it's tried to correct itself for that major mean reversion. The time taken for the stock has been on the higher side, but I think eventually I would probably expect the stock to try and come back into a further mean reversion mode. So maybe a potential 500 to 700 points on the upside is what we can expect for Bajaj Auto. Say closer to 9,500 levels is where a medium-term trader can keep a target with a time frame of 3 months at least for the stock.
Okay, that's the take coming in on Bajaj Auto right now. The buzzes, of course, are pretty much the same, and IGL, IDEA, BHEL, other than, of course, a CDSL and LIC, which are holding out very smartly in trade. Siddharth Khemka as well joins in on the show to talk about his thoughts on the markets right now. Siddharth, hi, good afternoon. Good to have you on the show. An early onset of monsoon, and the IMD has predicted that it's going to be above normal, the rainfall this time around. Of course, one needs to see the spread thereof as it builds up. But do you think this would perhaps lead to a better rural recovery and a quicker one at that? And could some of those themed, sectors, you think one can look at those for investments?
Yeah, hi, good afternoon. Good to be on the show. I think, yes, I think this is the first time, I think in post 2009 that monsoon has arrived so early in India. And the start has been pretty good, spread across the country. And with IMD predicting an above normal rainfall, I think this should be supportive for the entire rural consumption theme to recover. That apart, even the government on its part has pivoted in this budget from capex theme to a consumption theme. So getting into as we progress into FY26, we believe that the consumption themes should do well and should also be aided by the rural recovery. What we also see in some of the sectors like fertilizers, two-wheelers, tractors, agri-related businesses, and some of the NBFCs are likely to see benefit from this phenomena.
Hi Siddharth, good afternoon. This is Shrishti also joining in. But Siddharth, the earnings season is just over now. Just a couple of companies that are left with their earnings. Help us with your key takeaway from the earnings season so far, and how are you penciling in the FY26 numbers?
Hi, Srushti. Good to see you. See, I think if you look at more or less the earnings season has been quite decent with results either in line to better than expectations. On the Nifty front, we were expecting an EPS growth of around 4%. What we have got is roughly around 6%. The final numbers are yet to come in, but that's the broad take that we are seeing. So the breadth of the earnings has also been pretty decent. So what we expect is that mostly Q4 should be the bottoming out quarter where the worst of the earnings season could be now behind. Q1, Q2 will also see benefit of a low base of last year. Q2 is somewhere where we see the earnings growth recovering sharply. For the entire year, FY26, we are penciling 12 to 14% earnings growth, while FY25 should end somewhere about 5 to 6% earnings. So overall, we are expecting earnings growth to recovery, largely driven by domestic sectors, be it your financials, be it the consumption theme, some of the other niche small sectors. I think that is something that should drive earnings this year. Global sectors like IT, pharma, commodities, I think that will remain volatile and prone to global news flows as well as developments, and hence not that clear in terms of the near-term outlook.
Right, okay, that's that on, how the earnings season has panned out so far. Just looking at, some of those numbers, and definitely we've been pointing out as to how smart the LIC performance has been. And that, of course, is one stock which is in focus. A lot of brokerages have actually upped and revised their price targets also. An Antique, for instance, it's upped its price target to 990 now on LIC. The management, of course, commented and spoke with us saying that they're targeting a 20% VNB margin in FY26. They plan to roll out Dive project from second quarter of this fiscal, and they aim to cross a 30% non-par share in FY26 as well. Siddharth, how is it that you've analyzed LIC's numbers? The underperform of the stock that it's been, you think finally it gets a little charged up in terms of an earnings performance?
Yeah, I think a lot of chatter today on LIC, the giant finally showing some signs of earnings recovery. Clearly, if you see, the insurance space has finally seen some growth in FY25 after the COVID, where the things were a bit on the subdued. But finally, FY25 saw good growth for private players, the likes of HDFC Life, SBI, which continues to remain our top pick. Nonetheless, LIC, we have a buy rating. We like the stock. We believe that what the management has guided, in terms of margin improvement, VNB margins are likely to improve, which showed some signs of improvement in Q4 as well, with the product mix changing in favor of non-participating, non-par policies, and that should help the margins to improve. Also, the management expects the premium growth to recover in FY26, and that should lead to some valuation re-rating going forward. This has been one stock where, while the market leadership has been sustained, growth has been something that is lagging the industry, and once the market sees growth coming back, I think that is where the market street will start rewarding the stock. So we have a buy rating and a target price of 1050 on LIC.
InfoEdge, that's the other stock which is in focus, although the brokerage notes after the numbers haven't been all that positive. There's been a bit of a downgrade coming in the stock. But we spoke with Hitesh Oberoi, the MD and CEO, earlier this morning to try and understand about the company's 1,000 crore rupee investment plan, which is now coming into play. It's a third fund that they're looking at. We spoke with Hitesh. He talked about as to how they're looking at investments in both AI as well as deep tech, and these are going to be some bottom-up stories.
Latest news that you are looking at 1,000 crore fund. I'm assuming that this 1,000 crore would be another fund where you would be looking at making fresh investments. How did you arrive at this number of 1,000 crore, and what could be the shelf life of this fund, and minus this 1,000 crore, what happens to cash in the balance sheet?
So, we are sitting on around, I think last I checked, we had about 4,800 crores of cash, between InfoEdge and our subsidiary companies. We, of course, need to deploy this cash productively. There is some cash we need for operations and for rainy days. And if there is an acquisition opportunity which comes our way. Outside that, of course, we give dividends to shareholders. We just announced a dividend. We upped the dividend this year. But after that also, there's a lot of cash which is left and which can be deployed. We have been very successful at spotting companies early, so we continue to make early stage investments. And normally the fund life is long, is like 10+2 or 12+2 in most of the funds we sort of do, because it takes a long time for a company to make it in India. It's not as if you get a company making it really big in 3 or 4 years. Often it takes 10 or 12 years for companies to make it. Normally, when we announce a fund, it takes 3 or 4 years to deploy the capital in these to find these companies and to do the first round, and then there are follow-on rounds going forward. So in the more successful companies, we do follow-ons and so on and so forth. So that's how this all works. So we've approved 1,000 crores of fresh investments, and these will be deployed, I suspect, over the next 3 or 4 or 5 years.
All right, so that's the commentary coming in from the management of InfoEdge. But back to the markets. Kunal, not many banking names are doing well today, but one such stock that really stood out for me is Canara Bank, because in the F&O space, I see it's almost a 2% jump coming in on this particular counter, and the stock is back to its December highs. What do you make of Canara Bank, and do you believe it can be a good buy here?
It seems like, Srishti, because there are many positives for Canara Bank. When we see this, I've been tracking this stock and few of the other PSU banking names over the last, many weeks, that these stocks have gone through a consistent price uptrend. There have been, phases where these stocks have gone through a sudden sharp correction, but that's, immediately been, seen a lot of recovery, and we've seen the stock making a new swing high for themselves on the weekly time frame charts. Now, the interesting bit is that in the last 2-3 months of this price recovery, Canara Bank has recovered more than 25 to 30% from 78 or 80, which was the low for the stock, to 110 plus mark. That's a very good recovery for a stock like Canara Bank. And then when we try and put this into context with the other banking names, for example, I think if I'm not wrong, even Bank of India has done reasonably well. You've seen Union Bank, a non-F&O stock, that's also done reasonably well over the last past few weeks. But the stronger ones, or the more larger weighted ones, Bank of Baroda, SBI, these stocks have actually underperformed. So there's a different uptrend which is going on within the PSU banking names, and in the usual large cap heavy weighted ones, they are actually being more flat or more sideways. But the ones which have been more mid cap oriented, the likes of Bank of India, Canara Bank, etc., I think these stocks are looking quite strong. So I would be bullish on Canara Bank. And with this move, what we've seen over the last 2 months or so indicates that we are looking at a substantial upside for the stock in the near term.
Right. Siddharth, what is your own sense on where there is value within PSBs, and would you go beyond SBI?
I think some of the smaller banks, they have reported good numbers, while the top pick continues to remain an SBI in the public sector banking space. I think some of the others like Canara Bank, Union Bank, and Punjab National Bank, I think we have a positive view on all three. Canara Bank has seen a sharp rise in the last few days after the results. There was a PAT beat led by lower provisions and healthy other income, and valuations were also comfortable. But our target price is about 115, and the stock is currently at 110, which gives little room for upside. So in that scenario, I think some of the others like the Union again, they have now moved up closer to our target price. So in terms of valuation, they are now closer to one time book value. And the only comfort that we are finding is that an SBI with the market leadership, strong growth, and the healthy balance sheet still trades at a huge discount to some of its private peers, the likes of ICICI, HDFC, which trade in excess of 2.5, 3 times price to book, while in SBI continues to trade at about 1.3, 1.2 times price to book.
All right, but Siddharth, off late, the other theme that has been doing well or catching up steam is the whole chemical and fertilizer basket. Give us some sense that any particular pocket within the same that is looking attractive to you, and any such company which stood out in terms of the earnings as well.
Yeah, definitely. I think there are two-pronged developments around the chemicals. The agri-related chemical companies that are definitely witnessing a strong buying interest in the market on back of the healthy monsoon expected this year. The recent other development was a large Chinese plant having a fire and disrupting some of the specialty chemicals, leading to speculation that the prices, the commodity prices or the specialty chemical prices could go up in the interim. So what we like, I think Deepak Nitrite is something that could do well in this space, given its exposure in the specialty chemicals. PI Industries, although the numbers were not that strong, but going forward, the outlook is improving, and we believe that with the improvement in earnings, that is another stock that could do well. If you look at the broader chemical space, the fluorine chemicals that continues to do very well, very strong numbers from both SRF as well as Navin Fluorine. Between the two, we like SRF. That is one of our preferred ideas within the overall specialty chemical space. We have a buy rating and a target price of 3,500. We see strong earnings growth both in SRF as well as Navin Fluorine going forward. While the valuations are already factoring some of this, but we believe that there is still room for upside in both of these stocks.
Okay, that's the take coming in on some of those chemical companies. In the meantime, the government has hiked the MSP for ragi now to 4,886 per 100 kgs from the earlier pricing. So that's the news that we're just getting in right now. In terms of laggards today, let's address some of those as well. Just going to refresh my screen before we take that forward. When it comes to the large caps, of course, it's the obvious names. You've got a Bosch, Escorts, Oro Pharma, etc., which are a laggard. But cement, of course, is a weakling today, and Ultratech is down nearly about 2%. Some of the smaller plays as well are languishing. ITC, of course, has got the overhang of the BAT stake sale. M&M is down about 1.5%. Eicher, Asian Paints, Hindalco. These are some of the laggards in trade. And even the private banks haven't really participated today. HDFC Bank is lukewarm, down about 0.4% or so. Similar as the price action for a Reliance, for instance, that as well is a laggard in today's trade. And it's lukewarm even for Kotak, which is down about almost 0.3% as we speak right now. But Siddharth, in this market, where is it that you would recommend profit taking, and where would you think that there are pockets which are now priced to perfection?
So yeah, I think if you look at some of these names, especially, so while we have a positive view, stocks are reaching our target price in the financials. For example, insurance, that is doing pretty well, but stocks like HDFC Life is much closer to our target price, about 800, just marginally below that. That is a space where we believe long-term investors, while might continue to hold because the growth is coming by, but definitely worth booking some profits. Defense is another space where, again, some of the stocks are coming to closer to our target price. Long-term structural story continues to be intact, but for short-term traders and investors might look at booking profits there as well. That apart, I think, again, EMS is a space where strong growth is reported in the quarterly earnings, as well as strong earnings growth are forecast for the coming period. But again, valuations for some of these space have reached closer to our target price.
All right, but Shrikant, there's one stock that we would like your advice on, and that is Schneider Electrics, because just yesterday we have seen great set of numbers coming in on this particular stock. After almost a 12% jump yesterday, it's a 13% uptick today. Give us some sense that do you believe that the run-up should come to an halt right now? Is the chart indicating the stock to be now in the overbought territory?
No, I think, see, the stock is rebounding after hitting the extreme lows of 500. It was around some 1000 levels in the month of March 2024. From there, all the way we saw the stock was falling to the levels of 500, and now it is rebounding. And after like specific news flow, I mean to say positive news flow. So I am of the view that the stock is in the pullback mode, strong pullback mode, and it can move up to 850 or 870 sort of level. So again, 10 to 12% sort of activity we can expect from current levels. Ideal strategy should be to hold on to the position if we have anything, or we should look for taking position if there is any correction. But broadly, I am bullish on the stock.
Some more perspective coming in from Dinsho Irani as well. We spoke with him earlier this morning, and here's what he's making of the pockets that look interesting in the market.
Fundamentally, if anything, we've just deteriorated over the December quarter. Still, downgrades are happening. The upgrade to downgrade cycle is definitely in favor of downgrades. The earnings for the index are getting cut. Valuations today, I mean, as we stand today, are probably touching the kinds that you saw in September of 24, right? So we are somewhere close to that peak valuation that we've been, and unfortunately, there's no earnings growth to support those valuations. I know it's always a bad idea looking at the review and driving a car, but even if we look ahead, this year itself, I mean, I don't think anybody is projecting a low double-digit kind of growth for earnings in the index. You're talking about a high single-digit kind of growth, and that also is looking an optimistic number given the way we've entered this quarter. So maybe you'll see some kind of uptick from the September quarter and definitely not the June quarter. Summer season coming off so appreciably, I mean, as in a very short summer season, I think there's a surplus now happening. So maybe you'll see a breather in that space. However, in the financial services, I think we are on track. We remain negative on IT. I think that relief rally which came about looks like done and dusted. FMCG again, don't see much of upside. Maybe there may be some demand uptick because of the rural inflation going down. But apart from that, I think the downtrade is going on happening on the urban demand front. We continue to be fairly comfortable in the hospitality space. Again, as I said, that the quality rooms are not available, and that's what is putting up the ARRs of the particular sector. Hospitals, again, derivative of hospitality, if you will, but the same thesis applies out there.
All right, so just a few minutes left for the markets to shut shop. But before that, let's also get you some of the BTST or rather STBT ideas from our experts. And Shrikant, you go first. Tell us which is the stock that you're eyeing right now?
I think metal space is still doing well. And in that specifically, if we go through with the stock of Hindustan Zinc, then there we can see that the stock is into a specific triangle bullish consolidation formation, and it has been like we can say the time of nearly 10-12 days. So crossing this level 450 is something which is positive for the stock. Based on this, I'm expecting stock to move towards at least 465 to 480 in the near term. And the other stock which we like is from the real estate space, and that one is DB Realty. It is around 191, 192. And the technical formation is suggesting us that it is in the range, but it is very close to its lower boundary. So risk reward ratio is quite favorable. We should look for adding DB Realty at current levels with a stop loss close to 187. And again, we can expect the levels of 200 on the higher side.
Okay, that's some of the realty plays which are looking interesting in the market right now. Kunal, would you have any BTST ideas?
Yeah, a couple of them. So sticking to the PSU theme, so the first one is a buy on PSU banking name. It's a buy on Union Bank, which I would suggest at current levels with a near-term target of 150. Stop loss to be kept at 139. And Hindustan Petroleum is something which started to look attractive in terms of a potential swing breakout. So would suggest a buy with a target of 432. Stop loss at 412.
Right, so those are the buy calls coming in from Kunal as well as Shrikant as well. But Siddharth, help us with your take on the OMC basket as well, because this time the earnings looked decent, but the fact of the matter is that the LPG losses are coming down for the OMC companies. Along with that, there has been a sell-off in the crude oil as well. So give us some sense that on the valuation front, do you believe it's time to look into some of these OMC counters, or do you believe that the sluggish trade or the sluggish movement will continue for some time now?
I think, Susi, there is definitely there is some room for upside in the oil marketing companies, helped by not only the strong numbers but overall reduction in the LPG losses plus the crude oil coming down. What we have also seen in Q4 is that the marketing margins has been quite a surprise on the positive side, much higher than what we were forecasting for not only for Q4, but we believe that for FY26 also, the marketing margins could be much higher than what we had forecasted. So overall, we believe that the earnings upgrade cycle could continue for OMCs in the near term as well. And on back of that, some of these OMCs could continue to do well. What we like HPCL, which is our top pick within the OMCs, followed by IOC, both of which where we have a buy rating. On HPCL, we have a target of 455.
All right, so that's the day coming in on an OMC basket. But well, of course, it's been a decent day for the benchmark indices, given the fact that tomorrow is the monthly expiry. And just today before that, we are seeing quite a sluggish trade on the benchmark indices. But well, of course, a lot of these movers and shakers in trade, the case in point being ITC. Yes, that has been one of the newsmakers. Other than that, the life insurance counters did very well. Select auto counters have been holding up well, and even Bajaj Finance did take the top spot in the Nifty 50 gainers as well. But Kunal, what's your take on the telecom basket as well? Because Bharti Airtel, Indus, Vodafone Idea as well, they have been having a good day. But any stock which is looking good to you?
So Bharti Airtel, of course, is one of the consistent ones. In fact, over the last 2 or 3 days, the stock has been into a 30-point range. I think 1830-35 as the low for Bharti Airtel, and 1860 thereabouts is the high for the stock. So which means that we are looking at a potential breakout of that range on the upper side. The momentum has come back into Indus Star, and I think that's going to be an interesting name to watch out, because over the last 3 months or so, the stock had recovered almost 30% from 310.15 as a low to 410, 415 mark for Indus Star, and then the stock getting into this 40-50 point consolidation. So with 370 acting as a very strong support, and the move in the last 2 days, especially today being on the back of higher volumes, I think this could trickle into a good risk reward entry for Indus Star. So it could be a good buy, say closer to 375 for Indus Star, for the potential target of 420, 425 plus for the very near term.
Okay, that's those are some interesting ideas coming in there. Looking at some of the IT names, unfortunately, that uptick that you had, or the handover from some of the moves in IT ADRs and Infosys to be precise, that move hasn't quite lasted. So after that little bit of a green tick, that also caved in, and finally these stocks are pretty much closing around the session lows and closing in quiet for themselves. At least that's the price action on TCS. Let's see where Infosys as well is, because there as well those gains got undone, and that's pretty much the case with the Tech Mahindra as well. Absolutely flat is how Infosys also is shutting shop in trade. But Siddharth, just final comments on whether it's time to buy IT. Has it sold off enough? Siddharth, you'll have to unmute yourself.
Hello.
Yeah,
Can you
go
hear me
ahead.
now?
Yes,
Yeah.
go ahead.
I was saying that the near-term outlook definitely is not that clear with IT companies, some of them withdrawing the guidance. Long-term, we believe that that's a space which will continue to do well, driven by the improving spend on digital as well as cloud computing services. What we like some of the mid cap or the tier 2 players where the earnings growth are much sharper. We recently initiated coverage on Hexaware Technologies, which re-debuted on the exchange after a hiatus. So we believe that the earnings growth for Hexaware Technologies could be higher in the range of 13 to 17% growth because of its better clientele as well as its key accounts. Overall, we believe that an earnings CAGR of 20% would be much higher even from a tier 2 IT pack, and that makes us positive on Hexaware Technologies. We have a buy rating and a target price of 950.
All right, that's the take on the IT. But Siddharth, before we let you go, what's your take on Dixon Technologies as well? Because of late there has been concerns around the valuations. Quickly, if you can help us with that.
So I think Dixon, the results were more or less in line with our expectations. The Q4 was a strong beat. Net profit was boosted also by a one-time exceptional income from the sale of one of its subsidiaries. We are expecting almost 30% revenue growth and a 44% PAT growth with EBITDA margins improving to about 3.8% and 4% over the next 2 years. Valuation do remain a concern, but I think with that kind of 40% earnings growth, the stock should do well. There has been some profit booking after the results, but we remain positive on the overall business, and we believe that once the growth comes back, I think that the growth has been pretty strong and stable. Market will stabilize and stock should do well.
All right, Siddharth, thank you so much for that. But with this, we let you go on that, gentlemen. Thank you so much for taking the time out. But just a few seconds left. It's been a decent day for the markets. While the benchmark indices have been consolidating all throughout, just a day before the monthly expiry. But definitely, HDFC Life was the top gainer in the Nifty 50, followed by BEL, Bajaj Finance, and even Hero MotoCorp did take the fourth spot in the Nifty 50 gainers. On the flip side, ITC on the back of that block deal was under pressure all throughout. BAT selling almost a 2.5% stake in that company. A 3% lower is where ITC is shutting shop. IndusInd Bank retracing back after the decent up move in the couple of days prior. A 2% downtake in this particular counter. Apollo Hospitals, Ultratech and Hindalco were some of the other top losers in the Nifty 50 side. CDSL one way up was more than 1500 is what you see on the stock price right now. A 4% jump coming in on this counter. IGL, MGL, these were also doing good in today's trading session. And within the chemical basket, PI Industry was also one of the counters that did well. And along with that, Telecom as a space did pretty well. Stocks like Vodafone Idea, Industar as well as Bharti Airtel were also doing well. On the flip side, it's Escorts, Aurobindo. These were the top laggards in the FNO side. But for this viewers, it's curtains down in this edition of Closing Trades. It's a goodbye from me and the entire team. Thanks so much for tuning in.